Hello and welcome to Investing for Generations. Today I want to talk about another stock in my portfolio. This time it's about Adobe. Once again, I want to talk a little bit about the company at first, then take a deeper look at the financials and management, and finally I want to answer if Adobe is a buy right now or even not. Adobe was founded in 1982, and I guess it's very well known as a software company. Everybody who works on a computer sooner or later run into Adobe products. Most famous, at least for photographers and artists, should be Photoshop. The company has a yearly revenue of 11.1 billion in a fast-growing market. As you can see per Yahoo Finance, the expected growth rate for the next 5 years is over 19% per year. Adobe should be also one of the winners of the current crisis, in which software are more used than ever and gets more important than ever before. By the way, I can highly recommend Yahoo Finance for research in stocks. It's a great website with lots of infos about the companies. Let's take a deeper look into the financial numbers. Therefore, I go to my spreadsheet as always. Adobe is traded at $380 currently and don't pay dividends so far. Very positive are the very high returns and margins. The gross profit margin at 85% is exceptional, as you can see over here. Also, the other numbers of net profit margin and operating margin are really good. So Adobe is a cash cow. They also have a great balance sheet, as you can see here. The debt-equity ratio is only at 0.39. Take a look at the management. The current CEO, Shantanu Narayan, served the company since 1998. Since you can see here on the website of Adobe over here, and is a current CEO since 2007. So let's see what the stock price did since. The stock price since 2007, when the current CEO took over, it's more than 10 times higher now. It looks like the management did a very good job in the past, so I have a lot of faith in it also in the future. All seems very fine with this company, even in the long run. For example, if you had invested a little bit in the stock crash in 2009, or really you would be a rich man right now. But what's about the price? My intrinsic value is $293. The current price at $380 is well above that. So the price seems overvalued right now. Also, the PE ratio is high at 58, which is a warning sign. So at the moment, it's not a buy for me. My conclusion is that Adobe is a cash machine in a fast-growing market with an excellent market position. But be careful, because in my eyes, it's overvalued right now. So for me, as a long-term investor and a value investor who likes to buy the companies at or even better below the intrinsic value, is a warning sign right now. Today I will show you also a first insight of my portfolio, or at least the position I showed you so far. I use a software for that called Portfolio Performance, which is in German, so maybe it's a little bit weird to you, but very helpful to me. As you can see, all 4 positions are well in the winning zone, which is nice, but the time span is too short. So it's nice, but not really important to me right now as a long-term investor. As we also can see here, all of my positions have almost the same size right now, so a quarter goes to all of them by now. We will see how this changes when I show you all of my other positions later. That's it for today. If you liked the video, give me a thumbs up and subscribe to my little channel. I will be back in the next days with another analysis of one of my stocks in my portfolio. So see you soon, take care, and bye bye.